Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. Today is Wednesday. It's December 21st. We're less than, a couple of days away from Christmas holidays. It's about 8:07 in the market. It's about 8:07, not in the market. It's about 8:07 in the morning, and the market's going to open up in about an hour and 23 minutes. It's kind of hard to speak this morning because I haven't spoken yet. I got to practice with someone first. Maybe Clyde will give me a hand in the morning. So you can see here the Dow's up almost 300 points. The NASDAQ is up 50 points. S&P's meeting us in between. To give you some idea of why that's happening, and I'll show you why, is first of all, market's having a little bounce because it's been down for about 5 or 6 days straight. But we've had some positive earnings. Nike's up 10%, which is quite a bit. They outperformed. Their revenue's up, I think, 17%. And FedEx, which did not do as well as expected, but they are up as well. I think these are just stocks that have overhad it. But look at the main trend here. It's down, which means I'm not expecting this rally to continue. And look at Nike. Look at the main trend. Remember, we got to follow the main trend, And the main trend over a period is still bearish on Nike and on FedEx. Let's look at the main trend. Yeah, the main trend is still lower. This is a 6-month chart. So I wouldn't hold my breath and expect big rises, but that's one of the reasons why it's happening. And also remember, liquidity is low. There's not a lot of hedge fund guys out there right now. You've got small-time algos and retail traders, and the moves are exaggerated. And I warned you about this end of last week, beginning of this week, that the moves are going to be exaggerated and you can't fall for this. Now, we've got a lot of burdens to overcome today. You've got consumer confidence, you've got existing home sales, and you've got a petroleum status report. I think the petroleum status report is going to be good. I don't think consumer confidence is going to be up to par, and I know that existing home sales, we know that interest rates have been going up. I don't think this number is going to be really great, especially with forward permits yesterday showing that permits are down below estimates. And then tomorrow, oh boy, you've got GDP, jobless claims, you've got durable goods, personal income. The market has a lot to overcome. Now, one of the things that I heard was the market is here's one of the things you got to understand. Wall Street will use anything they can find to show you that the market's rallying. Hey guys, markets are rallying. Bonds are up today. Well, bonds lost this is the TLT. It went from 109 to 102, and they're up 22 ticks, but the headlines this morning are bonds are up. Well, bonds aren't up. They're barely hit. Look at this. They lost 1.78% yesterday, and they're up 2.21, and everybody's making a big deal out of it. So I would hold on to this big rally that you're seeing pre-open. Don't get so excited about this. As you can see here, bonds are still heading lower. We are nowhere near being oversold yet, and I think there's much more downside because interest rates are, in fact, going to go higher. Let me talk about the nitty-gritty and talk about market and what to expect today and what's on the table, and then I'll get more into the technicals there. So, earnings news. Nike jumped more than 12% in pre-market trading after reporting stronger than expected second quarter revenue. FedEx climbed more than 4%. We just talked about all of this after reporting better than expected EPS, although they weren't that great. Tesla got a boost because there's news that Elon Musk may resign. That's from Twitter, which would be a good thing. But I'm not seeing a lot of upside in Tesla because consumer spending is down right now, and people are not happy with Musk. Energy stocks could see some upside. We saw the API report late Tuesday that crude supplies fell 3.1 million last week. And we're going to get more inventories reported. Let's see here, right here, petroleum status report. That's going to happen in about 2 hours and 19 minutes to be specific with you. U.S. Mortgage Association reported 30-year mortgage rate fell to 6.34% from 6.42%. Ooh, this is what I'm talking about. This is not happiness. This is just nonsense. Overseas stocks were mixed. In Europe, we were up 1%. China closed down 0.17%. As you can see, holiday is definitely here. And Japan closed down 0.68 to a 2.25 month low. So Tesla came out with numbers, some upside. Nike had a move. FedEx had a move. Now, we've got some earnings on the table today. And Starbucks slid at 1%. It'll be a crazy market today. Energy stocks are looking really good, and we're long energy stocks. Today we've got earnings on Carnival. Remember, we're short Norwegian. Cintas, I think that's a healthcare biotech stock from my recollection. Don't quote me on that. And Micron, semiconductors. So keep your eye on chip stocks. Healthcare, let me just make sure that's a healthcare stock. I don't want to embarrass myself in front of thousands of people here, which I often do. Let's see here. See, I'm totally wrong. It's furnishing, Cintas. It's a retail store. Industrial. It's like furniture for furnishings. Industrial, businesses, open doors, confidence, wide range of products, services, customers' image. Men's and boys furnishings, work clothing. Okay, I got it. Work clothing, not healthcare. Not healthcare by any stretch of the imagination. So let's talk a little bit about technicals as I explained. So first of all, S&P 500 looks like it's going to come up a little bit. That's fine. We went from 411 all the way to 377. It's nice to have a little bounce, but we're not oversold. Also, we're in a downtrend. We're below the 200-day moving average. And if we break the 373 level, there's really not much there. So I don't know if there's a lot of support there. On the NASDAQ, let's take a look at the NASDAQ. NASDAQ is bouncing, and I could see a bounce. But again, look at the long-term trend. This thing can sustain itself maybe for a few days before turning back down and taking us down to the 259 level, which is a good support level here. Now, if you look at individual sectors, look at technology, communication services. This may be one of the reasons why we're rallying today, because it's reaching a new low and it's rallying in anticipation of moving higher, because usually after something reaches a new low and is oversold, let's see if it's oversold, we may get a bounce. But again, remember, this is a bounce. That's, let's see here. Yeah, we are oversold. This is a bounce that's against the main trend. So even if we go higher, I'm not expecting a huge bounce, maybe erasing 3-4 days of losses and then coming right back down as well. Yesterday we were down 1.6%. We're already up 134. I don't think the gains will hold. Looking at other sectors, I think financials will have a little reprieve. I think materials will have a little reprieve. I think utilities will have a reasonable reprieve. Technology may have a reprieve. Mostly, things do look like they're going to bounce. If today the market does not hold this rally, then we're not going higher at all. I'm thinking, though, it will. But again, if you look at momentum levels, they're not cooperating with us. You only have 40% of stocks trading above the 50-day moving average and 36% above the 200-day. When you look at the indices, each individual sectors, 49% of stocks trading above the 50-day moving average, 45 trading above the 200-day. The Dow, 60%, 45%. That's a red flag right there. And as you can see here, there's a lot more red here than green based on what we've been seeing lately. And the NASDAQ, 49%, 43%. So don't hold your breath. And the composite, 38, 37. So I have a lot of doubts that this rally is, in fact, going to hold and sustain itself. Now, the sectors you should be watching and the sectors you should be long, let me do this again so there's no surprises. Healthcare, industrial, consumer staples, energy. Look at energy. It's starting to come back up. Imagine that. Told you it would. Financial, basic materials, utilities. This is starting to look kosher again. Stay with healthcare, stay with industrial, stay with consumer staples, and stay with energies. I think if you stay with these four, it'll keep you out of predominant trouble. Stay away from technology, real estate, communication services, consumer discretionary. Stay away from these. Now, interestingly, I was looking at Carl Icahn and Stanley Druckenmiller's portfolio. They have a lot of utility stocks, a lot of utility and energy stocks. I agree with that, and I don't think utilities are going to go much lower, especially if energy starts coming up, because you got to pass the cost of energy to the consumer. Utility companies are not going to suck it up. It doesn't work that way. So I'm still liking healthcare, industrial, consumer staples, and energy, and a little bit of financials and basic materials. Again, you want to be in the upper half, not the lower half of the range. Keep your eye on the bond market today. And if this rally fades away, which I think it will, we're not going to see a lot of love. And also, keep your eye on consumer confidence. That's going to be a huge report. It's coming out at 10 a.m. Their consensus is 101. The range is 98 to 103. Also, keep your eye on semiconductors. Semiconductors. Ticker symbol is SMH. This is a semiconductor ETF. Semiconductors, Micron's coming out with numbers today. If this continues falling, it puts a lot of pressure on technology stocks. So keep your eye on that. Now, in terms of, remember, today's Wednesday. On Wednesday, I give you a long and a short setup. Well, guess what? I got two longs, not one, two longs, and I got two shorts for you today. So my first long is Marathon Petroleum. I think it's going to start coming up. I think we have at least till 120. I think it'll make new highs again, but I think we have at least till 120. It's turning around. Momentum is midstream. It usually doesn't stop there, especially if we can take out the high. So I think we got a little more upside there, and it's already slated to open up at 1.5% higher, which is a good sign. So I think you're not going to go really wrong with energy stocks right now. And I've been talking about this stock for a long, long time. Cardinal Health, look at it go. Healthcare, and healthcare. There's not a lot of financial monkey business going on with healthcare, a lot of government spending, especially after COVID. I like Cardinal Health. I like the stock. Definitely would buy it right now. Now, you're probably asking, Roger, what stocks would you liquidate? What stocks would you sell short? Which stocks would you not have in your portfolio? Well, remember, Carnival's coming out with earnings today, right? Well, we've been short Norwegian. And we're short this stock, actually. It's finally starting to come to it went against us quite a bit, but it's finally starting to come back down. I think it's going to go down to the $12 level. I think we have a 14 put, and I think we're good for another $1 in this $1.50 on this stock. I'm just not seeing a huge rally. Who in the world is going to take cruise lines with COVID increasing in China, energy prices high, and great inflationary pressure, and we're not seasonal right now. We're not seasonal for another 6 months. So I think this is going to just drop right back down. And Caesars. A lot of gambling is, believe it or not, a lot of gambling is done from China. China's having another COVID run-up. China's not doing well, and consumer spending is not that great right now. And I think when consumer confidence comes out today, I think investors will see that. So I'm bearish Caesars Entertainment. Again, look, it hit the 200-day moving average. It diverged here. Major divergence right here. Big red flag when we see a divergence. Look at that. Up, down, and then fall down. I think this thing is going to go down all the way to 39.50, which means it's got another $5 in it, and then I think it's going to go down to 28. But nonetheless, I think buying a put on Caesars is not the worst idea in the world. Now, today's Wednesday. Folks, there's something you need to know. I recently developed a tool that uses historic data, to help me objectively decide where certain stocks are likely headed next. Doesn't use news, doesn't use analysts' expectations. It uses technical price action. And it's perfect for today's market because it signals longs and shorts, not just longs, shorts too. Today, 1 p.m. Eastern time, 1 o'clock p.m. Eastern time, not only am I going to show you trades on how to download, install, and use this charting tool, but also you can use it to hunt down some of the biggest market moves this week. You do not want to miss out on this. Follow the link below. Check it out. If you're watching on YouTube channel, go to the Wealth Press YouTube channel. It's in the descriptor. Like this video, subscribe to this channel, and I want to hear some feedback, especially before the holidays. I'll be in Miami tomorrow, but I'll do my morning video before I leave. Send me emails, support@marketgeeks.com, comments, questions, happy wishes for the New Year's, whatever you may want. And I'll talk to you guys later. Bye. Have a great day, and keep your eye on consumer sentiment report. It may not be pretty, and this market is not set to go up very much. So don't get too excited. Bye.